Welcome back to Stock Talk. Hey, if you find these deep dives helpful, hitting that like button or sharing it really does help us out.
It really does.
So today we're jumping right into Ford Motor Company, specifically their first quarter 2025 results, which just came out on May 5th.
Yeah, fresh off the press. And these reports, they can be pretty dense.
Exactly. So our job today is to pull out the really important stuff, maybe some surprising details, just to give you a clearer view of where Ford stands right now.
Okay, let's get into it. Ford's Q1. It's a bit of a mixed picture, I'd say. Revenue came in at $40.7 billion.
Which is down about 5% year over year.
Right, but the bigger story, I think, is net income. It dropped significantly to $471 million.
Wow, compared to $1.3 billion in Q1 last year?
Yeah, that's a 64% decrease. I mean, a drop like that definitely puts pressure on things. Investment, maybe even how investors feel.
64% is huge. And looking at their adjusted EBIT, that trend kind of continues, doesn't it? Maybe just quickly explain adjusted EBIT for listeners.
Sure. Think of it as their operating profit, but they adjust for certain items that aren't part of the regular business, gives you a cleaner look at core profitability.
Got it.
And that was $1.0 billion. Again, way down from $2.8 billion last year.
So that's a 61% drop there?
Exactly. And the adjusted EBIT margin, basically how much profit they keep from each dollar of revenue, also fell hard, down 4 percentage points to just 2.5%.
Oof, 2.5%. That's pretty thin.
It is. So yeah, Q profit numbers are definitely pointing down.
Okay, but I noticed something that looked positive, operating cash flow. That actually went up quite a bit.
Ah, yes, good catch. That's an interesting twist. They generated $3.7 billion in operating cash flow, which is way up from $1.4 billion.
So more cash coming in from the day-to-day business.
Right. But, and here's the nuance, their adjusted free cash flow, that's cash left after they pay for big investments like plants and equipment, was actually negative, a use of $1.5 billion.
And that's more negative than last year's $7.5 billion use.
Precisely.
Oh.
So while operations brought in more cash, they ended up spending even more, perhaps on investments or, other things. It does make you wonder where exactly that money went.
Yeah, interesting. And what about the top line? Revenue down 5%, and wholesale units were down too, right? By 7%?
Yeah, 7% drop in wholesale units, down to 971,000. Wholesalers, for those listening, that's basically cars sold to the dealers.
So fewer cars shipped out. Why was that?
The report specifically mentioned planned plant shutdowns. Seems they were getting ready for new models and also doing some inventory rebalancing.
Okay, so maybe a deliberate slowdown for strategic reasons, not necessarily a collapse in demand right there.
That seems to be the explanation, yeah. A short-term hit for longer-term goals, potentially.
All right. Now, despite those headline numbers being down, Ford did point to some positives, like cost and quality improvements.
They did, and that's important. They highlighted this is the third quarter in a row they've seen year-over-year cost improvements if you exclude tariffs.
Third quarter, okay.
And they said these savings did help offset some of the negatives from, lower sales volume and maybe some pricing pressures.
And the other bright spot seemed to be Ford Credit, their financing arm.
Absolutely. Ford Credit had a really strong quarter. Earnings before taxes were $580 million.
That's a huge jump, like 78% up from $326 million last year.
It is. Mostly driven by higher financing revenue, think higher interest rates, and just having a bigger loan portfolio. And notably, Ford Credit sent $200 million back to the main company.
So, a nice contribution there.
Definitely a helpful cushion.
Okay, let's break down the different parts of the business then. Ford Pro, Ford Blue, Ford Model E, starting with Ford Pro, the commercial side.
Right. Ford Pro, revenue there was $15.2 billion, which was actually down 16% year over year.
16% down.
And their EBIT, earnings before interest and taxes, $1.3 billion. That was down 56%. Quite a drop.
Wow, but the margin I saw that was still pretty healthy at 8.6%.
It was, yeah. Still a strong margin. Yeah. The EBIT drop was, again, mostly due to lower wholesale volume, down 14% because of those shutdowns we talked about,
Okay.
and also some unfavorable pricing in the fleet market. But here's an interesting bit. Their paid software subscriptions grew.
Ah, the recurring revenue piece.
Exactly. Up to 675,000 subscriptions. That's up 4% just from the previous quarter. So that side of the business is growing nicely.
That's definitely a metric to watch. And CEO Jim Farley, he's pretty bullish on Ford Pro, isn't he? He calls it a major competitive advantage.
He really is. He stressed that Pro's doing well, gaining share in profitable areas, both here and in Europe. So despite the quarterly numbers looking down, the underlying story seems positive.
Okay. Now, Ford Blue. This is the traditional gas and hybrid vehicle business. How did they fare?
Ford Blue. Revenue was $21.0 billion, down just 3%. So not a huge drop on the top line,
Okay.
but the EBIT, the profit,
Hmm.
that took a massive hit, just $96 million,
96 million, down from what?
down from $901 million in Q1 last year. That's an 89% plunge.
89%. Goodness. That leaves the EBIT margin at just 0.5%, practically breaking even.
Barely. It really raises questions about profitability in their core traditional business right now.
What drove that massive drop in profit for Ford Blue?
The report mainly points to, well, the expected volume decline in that segment, but also unfavorable foreign exchange rates hit them hard.
Ah, FX. That can really sting.
It can. On the plus side, though, they did mention that their big names, like the S-Series trucks and the Bronco, are still leading their segments. So the brand power is there.
Right, that brand loyalty is definitely worth something. Okay, let's pivot to the one everyone's watching. Ford Model E, the electric vehicle division.
Model E. Okay, here the story is different. Revenue exploded up 967% year over year to $1.2 billion.
Wow, nearly 10 times higher revenue. But still losing money, right?
Still an EBIT loss, yes. $849 million lost in the quarter. But importantly, that loss is actually 36% smaller than the loss in Q1 last year.
Okay, so losses are narrowing while revenue skyrockets. That's progress, I guess.
It suggests they're moving in the right direction, financially speaking, even if profitability is still a ways off.
What's driving that huge revenue jump then? Just selling a lot more EVs?
Pretty much. Wholesale units jumped massively, from around 10,000 last year to 31,000 this quarter.
That's more than triple the volume.
Yeah, 213% increase.
Yeah.
So huge volume growth. Their focus now, they say, is on improving the gross margin, making more profit on each EV sold, and being disciplined with investments in batteries and the next generation of EVs.
And they mentioned U.S. retail sales were up too.
Yeah, up 15%, which they link to some specific marketing, their Ford Power Promise campaign.
Okay, so Model E, big growth. Losses improving, but still significant. It feels like they're making progress, but it's costing them.
That sums it up well. Growth is there, but the path to profit is still under construction.
All right, let's look at the bigger picture, Ford's overall financial health. Balance sheet looks pretty solid.
It does seem quite strong, yeah. Finished the quarter with $27 billion in cash and marketable securities.
27 billion.
And total liquidity cash plus available credit was $45 billion.
Yeah.
That operating cash flow improvement we mentioned, $3.7 billion, helps too.
Plus, they renewed their credit lines recently.
They did in April.
Oh,
Renewed $18 billion in corporate credit facilities. So access to capital is very strong.
Hmm.
The CFO, Sherry House, talked about their disciplined approach to capital allocation and how this strong balance sheet gives them flexibility.
yeah, having that kind of liquidity provides a lot of breathing room, especially with all the uncertainty around. I did see inventory went up, though.
It did, to $17.9 billion. They attributed that to production planning and, again, those inventory adjustments tied to new product launches.
So maybe not a red flag yet, but something to keep an eye on.
Exactly. If it stays high or keeps climbing without sales picking up accordingly, then it becomes more of a concern. But for now, the explanation seems plausible.
Okay, now the elephant in the room seems to be tariffs. Ford spent quite a bit of time on this in the report.
A huge factor. You're right. So much so that Ford has actually suspended its financial guidance for the full year 2025.
Suspended guidance. Wow. So no forecast for adjusted EBIT or adjusted free cash flow?
None. They're saying the uncertainty, primarily from tariffs, is just too high right now to give a reliable prediction. They estimate the net negative impacts from tariffs could be around $1.5 billion to their adjusted EBIT this year.
$1.5 billion. That's a massive potential hit.
It really is. And it depends heavily on, trade policies, which can change.
And it sounds like before factoring this in, their underlying business was actually doing okay relative to their own expectations.
That's a key point they made.
Yeah.
They said the core business was performing within their previous guidance range, which was $7 billion to $8.5 billion in adjusted EBIT before accounting for these potential tariff costs.
So the core plan was on track, but this external factor is throwing a major wrench in the works.
Exactly. They listed risks like supply chain disruptions, new or higher tariffs, both U.S. and potential retaliation from other countries, and just general uncertainty about how tariffs will actually be implemented.
So, bottom line, too much unpredictability. They can't confidently forecast the year.
Precisely. They have pulled back the guidance, citing these big near-term risks,
Yeah.
and said they'll try to give an update on the Q2 earnings call.
really highlights how global politics can directly impact these huge companies.
Absolutely. It's a major headwind.
So, given all this, the segment performance, the tariff cloud, what are Ford's main strategic priorities now? What are they focusing on?
Well, the message seems consistent with prior quarters. They're doubling down on cost reduction and quality improvements. That seems paramount.
Makes sense.
Ford Pro continues to be a major focus, driving growth and profitability there. Disciplined capital allocation is another key phrase they keep using, being careful where they spend.
Especially with the EV investments.
Right. And improving the financial performance of Model E, specifically getting those gross margins up, is clearly critical.
Okay. So if you were to boil down the opportunities and risks from this report, what stands out?
Opportunities. Definitely the strength and potential of Ford Pro, the growing digital subscription revenue, the sheer volume growth in Model E, even with losses. Ford Credit's solid performance and those ongoing cost improvements. Those are real positives.
And the risks.
Risks are pretty significant too. Top of the list is tariffs, the impact, the uncertainty, then potential supply chain issues, further trade tensions, policy shifts, and that really concerning margin pressure in Ford Blue.
Yeah, that Ford Blue EBIT drop was stark.
It really was. Needs watching.
So wrapping up this deep dive on Ford's Q1, it feels like a company facing some pretty strong headwinds financially, right? But with pockets of strength and a solid foundation.
I think that's fair. It's definitely a challenging picture overall. Revenue down, net income way down, EBIT down significantly.
But
Ford Pro is showing resilience in its margins and growing services. Model E is growing volume rapidly. Ford Credit is contributing nicely, and balance sheet is strong.
the big asterisk, though, is the tariff situation.
Huge asterisk. Suspending guidance tells you how uncertain they feel about that $1.5 billion potential hit. It really overshadows the near-term outlook.
Definitely gives investors a lot to think about. So the final thought, the big question this leaves hanging for you.
For me, it's really about navigation. How effectively can Ford steer through this really choppy water of tariff uncertainty while also making the massive, necessary investments for the future, particularly that EV transition?
Right, balancing today's economic reality, these tariff pressures, with tomorrow's strategic needs and electrification. That's the tightrope.
It really is. That balancing act will be crucial for them in the next few quarters, maybe even years.
A very important question. Thanks for breaking all that down.
My pleasure.
And thanks to all of you for tuning into Stock Talk. Hopefully this look at Ford's quarter gave you some valuable context. Remember to like and share if you found this useful. We'll catch you on the next deep dive. Stay sharp out there.